नरघट तक है तेरी कहानी पग पग प्यारे दंगल 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 सूरज तेरा चढ़ता ढलता गर्दिश में करते हैं तारे दंगल 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 दंगल.
Lecture number 3, we are starting with, and the name of the reading is Fixed Income Markets, Issue, Trade and Funding. I have written in there. Lecture number 3, we are doing today will be learning outcome number C, that describe the mechanism. We have discussed global market classifications. We have discussed how interbank offer rate is treated as a reference rate in floating rate bonds. Today we will be starting with learning outcome number C. In that we will be discussing with the mechanism in primary market. When we are issuing fixed income securities for the first time, what is the mechanism behind that? Whether we are selling the whole to our investment banker or not, and what is the mechanism behind that? What is a gray market transaction? What is the meaning of auction? How these are being traded? How a company issue firstly to the investment banker and then investment banker to the dealers. All that mechanism we will be discussing today. So please take out your registers, my dear friend, LOCC. And the most important part in this will be that if I issue a first time, if a company, if an issuer is issuing first time the bonds, then those are named as primary market transactions. So first point, I know that you know that first point, but still please write down sale of newly issued bonds are named as primary market transactions. Now we have to see that how these primary market transactions are being done. There are two ways in which issuer can do primary market transaction, because they are being issued at first time, either through public offering or through private placements. When I say public offering, the issuer generally takes the help of an investment banker, because in that case he sells the whole issue firstly to the investment banker, and then this investment banker will sell to the dealers. Now the transaction between the issuer and the investment banker, that can be underwritten. When I say underwritten, there can be two ways in this. So that I am telling you. But firstly, write on first point. I hope you have already written that. Please write on second point. Bonds which can be issued in in primary market can be through public offering or through private placements. When I say private placement, it means I am selling in wholesale, to a qualified institutional investor. That is named as private placement, and that qualified institutional investor will not sell to dealers. But when I say public offering, it means I am selling, issuer is selling to the investment banker, and that investment banker will be selling to the dealers and then to the investors or all that. So public offering. So firstly I am discussing with public offering. There could be public offering again. Public offering means either I am selling to the public at large, to the dealers, to the investment bankers, or to a qualified investor. So I have bifurcated public offering into two parts. One is a real public offering, in which we involve bankers, we involve merchant bankers, we involve investment bankers, we involve dealers. That is a pure public offering. And second is, the other one is in which only one qualified institutional investor is involved. That is named as private placement. So public offering I have divided into two parts. Now let me start with that. This public offering, issuer can take the help of an investment banker. These days investment banker can be a one investment banker, or there can be a syndicate of investment bankers. Like in case of Kingfisher Airlines, when 2 or 3 banks join together and give a loan to Kingfisher Airlines, Vijay Mallya. So this issuer can sell the issue firstly to a single investment banker or to a group of investment bankers. That is named as syndicate investment bankers. You are getting a point? So fourth point is very important. Please write down. A public offering using an investment bank may be underwritten. Now it can be underwritten, or it can be on the basis of best effort basis. Now, what is the difference between underwritten and best effort basis? We have discussed primary market equity transactions. When I say it is underwritten, it means the whole issue will be sold to that investment banker, and then that investment banker gives a guarantee to the issuer that whether he sell to the dealers or not, whether dealers purchase it or not, he will be going. This investment banker will be purchasing all the remaining securities. That type of guarantee which investment banker gives to this issuer is named as underwritten. Now in this case, because investment banker is purchasing in wholesale, so his objective will be to purchase at a lower price. Now this is testable point which I am going to tell you. Please write on fourth point. Please firstly write on fourth point. A public offering using investment banker may be underwritten, as per which investment bank will purchase the entire issue. It will purchase the entire issue, not at which price they are purchased. So there will be a bargaining in between the issuer and the investment banker, because objective of the issuer will be to sell at a higher price, and the objective of the investment banker will be to purchase at a lower price. So there will be a conflict between the issuer and the investment banker, between the person who is purchasing the whole issue, because he is giving a guarantee. Now again, there can be an underwritten agreement or there can be a best effort basis. Now when I say best effort basis, in that case the investment banker is not taking any guarantee that he will be buying the remaining shares. If there is no guarantee as such, it is named as best effort basis. So fourth point, a public offering using an investment bank may be underwritten, as per which investment bank will purchase the entire issue and selling the bonds to the dealers. No doubt, investment banker will be selling to dealers or on best effort basis. Now, I have told you what is the meaning of best effort basis. Now, there will be auction behind that. Sometimes there will be auction, and which we have discussed in the economics, that there is a Dutch auction. Which within Dutch auction we have competitive auction, we have non-competitive auction. Within competitive auction we have quantity and price, and within non-competitive only quantity is there. And then on the basis of average we calculate an average. On the basis of competitive auction we calculate average price. Similarly here also, when there is a auction of government debt, I repeat, in government debt, when there is an auction of government debt, or when there is an auction in this case between the issuer and the investment banker, we take a single price which is calculated on the basis of average. So let me, I will be telling you that from just right of fifth point. Public offering may also take place through auctions. So just I have told you auctions, and generally this process of auction is been considered in case of whenever the government wants to issue the debt. Whenever government wants to take the loan, that generally there is a case of, for example, US government wants to raise a loan. Generally it is being traded through the mechanism of auctions, and auctions are of two types, but that we will calculate the average price of that, and that is on single price. And the last point which I will start with is gray market transactions. Now it is in India it is named as dabba transactions, because these are illegal in nature. Because if you purchase securities directly from the exchange, then investor has to pay security transaction tax, and there are so many other commission and all that taxes are applicable. So in case an investor does not want to purchase through exchange and does not want to pay STT, then he can go in a dabba transaction, that is gray market transaction. It means when securities are being purchased and sold prior to IPO, those transactions are named as gray market transactions. So if before an IPO is not is in existence, it will be coming after some time. But if we are purchasing the securities before that IPO, no doubt it is an illegal transaction, and it is totally on the trust factor. For example, Mr. B wants to convert his black money into white money. Now this black money person, this Mr. B will purchase the securities before IPO through the dealer. Let the rate be 70 rupees. Let the rate be $70. And it is on the totally on the basis of a telephone call or on the trust basis. And after IPO, suppose the issue was quoted at $100. Now the difference is $30. Now this difference of $30, now this person, Mr. Black, can sell those fixed income securities after IPO was there and can be sold at 700, and he has purchased at 70, so the difference is 30. So this 30 rupees or $30 difference can be enjoyed by this investor who named as Mr. Black. Now, in case of black market transaction, this is also named as black market, gray market, or a dabba transaction. So just write down, I have given the example also. If before an IPO securities are being traded, then it will be named as gray market transaction. And once these, for example, let the rate be, let me tell you the example. This person wants to buy from a dealer before IPO, and let the rate be 70, and he has purchased 100 units of fixed income securities. And after IPO, if the rate was 100 rupees, 100, then he can sell it at 100 units, $100 at the rate of 100, and this person can enjoy a profit of 30. So the point is, what the point which I want to tell you, it is named as a gray market transaction. So in this learning outcome C, what I have told you, that what is the mechanism, what is the mechanism in primary market in case of fixed income securities. So there is a mechanism of public offering, there is a mechanism of private placement, there is a mechanism of gray market. Within public market, we can involve investment banker, and we can have an underwriting, or we can have a best effort basis. And then if there is a case of best effort basis or underwriting, if we are selling to investment banker, then with the help of auction, and generally those auctions being followed in government debt. So like this, we should be at least aware of, because these are theory parts and these are testable areas. Hope you have enjoyed the lecture. Be happy, be jolly, be cheerful. But before that, I just want to tell you through Investopedia that what is a primary offering process for bonds. Just see, competitive sale is there, with the help of auctions, negotiated sale is there. Syndicate procedures. The composition of syndicated changes will be the new issues, negotiated sales, members of at least. So you can have an idea with the help of Google Baba also, that what is the meaning of, or what are the mechanism of primary market issue in fixed income. Be happy, be jolly, be cheerful. Be happy, be jolly.